Very good evening. Very good evening. So,
Sir, good evening.
very good evening. Very good. So today we'll go on to discuss about the last unit, which is basically stating about the management of finance by the banks, and also it includes the management principles in insurance. So we'll divide it into two classes. Tomorrow we'll also discuss about some questions, possible questions. Now today's discussion is all about the management of finance in banks. That means whatever activities the banks are carrying out, how they go on to manage those things, what is actually being done by the banking officials on a regular basis to keep track of the activities which they have uh, done on a daily basis. So in that aspect, we'll basically go on to discuss about the different books, different records, different ledgers, which are basically being kept or maintained by the banking institutions. And at the same time, we also will have some sort of idea about the books of accounts being maintained by the bank. And in that perspective, we'll find out the balance sheet of a bank, what things are being included in the balance sheet of a bank. Those things we'll discuss. So first and foremost thing is that since banks are considered to be financial institutions, so they deal with finance either in the form of acceptance of money, in the form of deposits, or in the form of provision of loans and advances, in which they provide the financial support to those who are in requirement of funds, might be individuals, might be corporate entities or business entities. And at the same time, they also are being involved in some sort of investment. So the banks, since are dealing with public money, because they basically mobilize the funds from the public in general. So they need to manage the finance properly, because whatever finance they are dealing with, it is basically considered to be the public money. And the responsibility of the bank is to ensure the safety of this public money, is to ensure that the public must have to carry out the banking transactions in proper fashion, and must have to ensure that the public are being aware about all sorts of their own financial transactions, and must have to ensure that all the details of the transactions which takes place in the bank branches on a regular basis, they are being maintained properly. So in that connection, we first will have some focus on the bank records. What sort of records are being kept by the bank? What are the different types of books which are being maintained by the bank? The ledgers which are being maintained by the bank. So all these things, I think you must have gone through it in your financial accounting paper. This is basically repetition, but in a theoretical. Now I'm going to share some slide with you, whereby we'll see what the bank records are all about, and what are the different books which are actually being kept by the banking institutions for what purpose. I'm sharing the slides. Please take the screenshots of the slides. Is it visible to all of you?
Yes, sir.
Thank you. So this slide basically indicates what bank records actually mean, because we are of the view that since bank is acting as a public financial institution which deals with public money, so it needs to maintain all the records of its transactions to show the transparency through which it actually operates, as well as to ensure that if any mishappenings happen in future, then with the help of these records, the mishappenings can be avoided. So bank records generally means as well as includes any book, register, account, statement, microfiche, copy or photocopy of an account statement, contract, letter of undertaking, deed, data card, index, spreadsheet, output, document or extract issued from computerized databases of the bank or any electronic, electrical, optical or computerized means in which data is registered or stored. So whatever are the sources through which the data is being stored, those things have to be recorded. So earlier physical records were used to be maintained. Now most of the records are being maintained electronically, but those are mandatory on the part of the banking institutions to keep. And is basically the, the where the data gets stored and whatever document is being issued in favor of certain transactions, all those things will come under the records category. So for all in all these ways, the banks need to maintain records. So it indicates that if you are opening an account, then you must have a savings account with the bank, and accordingly, the bank needs to uh, carry out the financial transactions on your behalf and needs to record those transactions. So whenever the transactions takes place, it needs to record those, so that if at any point of time you wish to have the financial statement of your transactions, the bank can provide you with that. Many times you often must you might have come across the fact that some people require the bank statements for some particular purposes, either at the time of uh, buying some consumer durables through a loan from any loan company, or at the time of taking a house or purchasing a house, or at the time of enrolling yourself into some courses, or in case of legal matters. So the bank statement is required in many cases. So that statement of accounts or that statement of transactions of the customers can be provided by the bank. But for that, the bank needs to maintain those in the form of records. So bank records include many lot of, and these are the things through which the records are being kept, either in the form of book or in the form of register or in the form of account statement like. Now coming to the different types of records. The first type of record, which is basically in the form of a book, we call it as the cash book. So it is to be maintained by all the banking companies. So whichever company are being involved in the banking activity, they need to maintain the cash book. What the cash book is all about. So generally, cash book, different types of cash transactions are being recorded. Whatever cash transactions takes place in the bank branches, the branch needs to record those cash transactions. And generally, the banks have two types of cash books. One is your rough cash book, one is your fair cash book. In case of rough cash book, it basically deals with the cash receipts and cash payments maintained by a receiving cashier and paying cashier respectively. So there are two different cashiers, because whenever you visit the branch, you can find that one is the receipt section, one is payment section. Receipt section, they will go on to receive the cash, and in payment section, they will go on to make the payment of cash. So if you have gone to the bank to withdraw money, you need to wait before the payment section. If you have gone to the bank for depositing your money, you need to wait at the receipt section. So there is a receipt cashier, there is a payment cashier, and both of them have the responsibility to uh, record the cash transactions that takes place in the branch of a bank on a regular basis. So generally, it records the serial number, the depositor's name, the amount received in cash, Whereas in case of cash payment, the serial number, the pay's name, pay means the beneficiary to whom the cash is being paid, amount paid, number of token, etc. are recorded. So whenever you are supposed to receive money from the bank, right, a token is being given to you, and on the turn of that token number, you will have to move to the respective payment section, and that payment section, the person who is in charge of that payment section, who is considered to be the payment cashier, that payment cashier will go on to pay you that amount. So there is a waiting time period also for different type of transactions. You might have to wait for 5 minutes or 10 minutes or maximum up to 15 minutes, because nowadays the banking services has been mended a lot. Earlier, where for having uh, for purchasing, suppose a draft or a banker's check, you were uh, needed to wait for at least 30 minutes. Whenever you went to the bank branch to withdraw money, you were asked to wait for 20-30 minutes. But now, because of the green banking system, it is being displayed on the bank board, on the board which is there on the top of the bank branch. That how much time period will it take for your transaction to be complete. So generally, the cash in the raw cash book, the transactions uh, involve cash, uh, either in the form of receipts or in the form of payments are being recorded roughly. Then in the fair cash book, it is basically a cash book when a separate person, after receiving the above information from the paying as well as from the receiving cashier, records the transaction in a separate book. It is for the official purposes. Because at the time of receiving cash or at the time of paying cash, you cannot go on to have a fair cash book. You just have to write it in a um, short form. After that, it will be uh, adjusted in the fair cash book. So fair cash book is being maintained by another cashier who takes all the information from both these cashiers and try to reflect it in the uh, fair cash. So naturally, the transactions of the fair cash book must tally with the sum total of the above two rough cash books. So rough cash books are of two types. One is receipt, rough receipt cash book. One is rough payment cash book. And by taking all the data from these two types of rough books, the fair cash book is being made. Then the cash balance book. The cash balance at the close of the day is written in the book, which is duly signed by the cashier and the manager. What amount has been paid, what amount has been received, what is the net cash balance, either in positive or in negative. So on a daily basis, the net cash balance has to be recorded in the cash balance book, and this book must have to be signed by both the cashier as well as the manager of the bank. Then day book. This is also another book which is needed to be maintained by every bank. Although the banking institutions nowadays are relying heavily on the technological advancement, still then these books are being maintained. It is a mandatory provision. Both offline as well as online, the records are needed to be maintained. Therefore, the job of the bank employees actually have multiplied a lot. Earlier, only physical form of record was being maintained, but now the electronic form of record is also required to be maintained along with the physical form. So therefore, day book is also being maintained in every branch. If you really want to know about the day book, you can ask any of the bank managers or bank officials what the day book is all about, why the day book is being maintained. So basically, the day book records the day-to-day transactions of the book relating to cash transfer, clearing, etc. Besides the above, received waste books, sectional cash book are also to be maintained. So along with day book, received waste book, sectional cash book are also to be maintained. And basically, the day book the day book records the day-to-day transactions of the book relating to cash transfers, That means how much amount of money has been transferred from one account to another. And the clearings, that means the check clearing. If any payment has been made through check, whether the check has been cleared or not. So, if that check has been cleared, then what was the amount of the check? So that amount has to be recorded in the date. Then comes the ledger. A ledger basically is considered to be in the form of a general ledger, but general ledger takes into consideration all aspects. It takes into consideration the deposit aspect as well as the loan aspects. But since in ledger we need to maintain about the regular transactions, and regular transactions takes place only in case of the demand deposit accounts, whereby in the demand deposit we have two different forms of deposits. One is savings deposit, one is current account deposit. And as you know, savings deposit is specifically meant for individual consumers or customers, and current account deposits are being made for the business customers. So accordingly, for current account, separate ledger is needed to be maintained. For savings account, separate ledger is to be maintained. And by taking into consideration both these ledgers as well as the information relating to loan accounts, the general ledger is being maintained. So first ledger is your current account ledger, and generally the current account ledger records the transactions of those customers who open current account, and the bank doesn't pay interest on the balance of this account, but a nominal charge is taken by the bank for rendering the services. As I said to you, there is no imposition of any limit on the withdrawal of money from this account. And generally, the transactions in such accounts are basically being carried out through the check. That is the reason why for maintaining these type of accounts, the bank needs to be more cautious. And for that, the banks normally do not provide any interest to the current account holders. Rather, they charge some fees from the current account holders. So there are many current accounts; those are to be serially numbered. So that ledger is being maintained only for the current account transactions. In the similar fashion, savings bank ledger has to be maintained, which records the transactions of those customers who open savings account in a bank, and the detailed description of the customer like name, address, occupation, all are being recorded along with an account number. If there are many savings account ledgers, they have to be serially numbered. So your savings account must have to be included in the ledger, savings bank ledger, and it must have to have a number being attached to it. Then comes the general ledger, and general ledger is considered to be the key ledger of the accounting system of a bank. So the key ledger of the accounting system of a bank is none other than the general ledger. There you cannot take into consideration the savings bank ledger or the current account ledger. It contains a total amount in respect of total current accounts, total savings bank accounts, total loan account, total bills payable account, total expenses, and total revenue account. All these accounts are to be taken into consideration for this general ledger to be made. So whatever amount is being involved in such accounts, different accounts, all those amount has to be recorded in the general ledger. So each ledger is kept under self-balancing system. A trial balance can easily be prepared, which helps to prepare the final account as well. So when the final account is to be prepared, generally the banks takes the help of general ledger. That is the reason why the general ledger must have to be maintained by the banks. Then come to the register section. Certain registers must have to be maintained by the bank for all sorts of activities they are carrying out, which involves some sort of payments as well as some sort of receipts. And the register section basically includes the bills for collection register. Bills here means the bills of exchange, and as you know, against the bills, advances are being provided because the bills are for a short period of time. These are short-term instruments where the maturity period is of up to maximum 90 days, not more than that. So since bills or commercial bills or bills of exchange, whatever name you can give it to it, are by nature a negotiable instrument. So it can transfer the ownership of the bill. Therefore, the banks can go on to provide advances against such bill. So whoever is the original owner of the bill, that original owner of the bill can shift the ownership or can transfer the ownership of that bill from its name to the name of the bank, where it goes on to uh, use the bill or goes on to sell the bill to get some advances against it. So bills for collection register has to be maintained. Securities register, whatever securities the banks have invested in, for that a register has to be maintained, so that by looking at that register one can easily find out what are the different securities in which the banks have invested, because investment involves the uh, money being spent by the bank in some productive ventures. So it is the responsibility of the bank to register all such investments which it has made, particularly the security. So for the securities investment, there has to be a separate securities register. Then document register, whatever documents the banks have collected from its customers, whatever documents are supposed to be given to the customers by the bank, all those documents are needed to be in the form of a document register. So in the document register, all those documents are being recorded. So these are the documents which have been given by the bank to the customer. These are the documents which have been received by the bank from the customers. So by looking at that register, you can easily know what documents the banks are dealing with. Then checks dishonored register. Check dishonored means if the customer has given the check, but the check has become bounced on account of unavailability of sufficient balance in the uh, account of the customer, or if suppose there has been some serious flaws in the check, like the check has been mutilated, or the date in the check is not clear, or there has been some scratches in the check. So in those cases, the check might not be honored by the bank. So the bank basically goes into these are not those checks. But most cases you can find check dishonour involves the check bouncing. So what whichever checks have been bounced, which were being uh, provided to the bank for collection purposes, uh, those checks have to be maintained in the check dishonour register. Then drafts payable register, as you know, draft is one of the products of the banking institutions through which they can go on to earn some income, because they go on to sell the draft, and in draft the uh, drawer as well as the drawee is none other than the bank itself. Since the drawer and drawee is none other than the bank itself, although different branches of the bank, uh, but the bank itself is selling the draft to ensure certainty of payment. So, and in each draft, there is a limit being fixed by the bank. So, up to 1000, if you want to purchase any draft, you'll have to pay 30 rupees as fee. Uh, 1000 to 5000 rupees worth draft if you want to purchase. You have to pay 50 rupees as fee. More than 5000 rupees worth draft if you want to purchase, you have to pay 100 rupees as fee, like this. So banks basically going to earn income. So whatever drafts the banks receive from the customers,
Sir,
it
your
will
voice is not
use
audible, sir.
to.
It is very low.
Why is it not? Okay, I'm trying my best. Drafts payable means what draft the bank is supposed to pay to the customer, because sometimes to avoid the uncertainty of checks, the drafts are being used which ensure the certainty of payment, and generally the banks are the issuer of the drafts. The drawer and the drawee of the draft is none other than the bank itself. So wherever the bank is supposed to pay the drafts, those drafts have to be recorded in the drafts payable register. Then the demand draft register, demand draft are being issued by the banking institutions. So whoever issues the demand draft, that branch uh, not necessarily has to make the payment, rather some other branch of the same bank has to pay the uh, amount of the draft. So demand draft means drafts which are supposed to be sold by the banking institution. So for the demand draft, there has to be a separate register. Then foreign letters of credit register. Letters of credit, as you know, basically it's a non-fund based credit system being given by the banking institutions, and generally for any sorts of commercial transaction, the letter of credit, which is basically in the form of a guarantee by the commercial bank on behalf of the customer, is being given. So if any letter of credit is to be given by the bank needs to maintain it in the form of a register, which is basically known as your foreign letters of credit register. So particularly related to the import-export activities, if any letter of credit is to be issued, then the foreign letter of credit register has to be maintained, by looking at which you can easily know what sort of export financing or import financing the government, the bank has provided. So these are the different registers which all the banking institutions need to maintain. Then comes the maintenance and preservation of records. Whatever records we have discussed till now, all those records are needed to be maintained and preserved by the bank. But for how long? The time period is normally 10 years. Up to 10 years, they need to preserve it. After that, they can go on to dispose it, or they can do away with it. So, because if they go on to keep hundreds years of records, then they need a bigger record room. So earlier, what was happening, since when there was no electronical recording was being maintained, so all the physical records were being kept. But if you go on to keep physical records for more than 10 years, it will be more tasking to you. That is the reason why up to 10 years, the physical records can be maintained. If you ask for records beyond 10 years, you might not get that from the bank in today's time period. Although, in case of some exceptional cases where there is a requirement of the records, those records can be kept by the banks for over 10 years. But in most of the cases, the records are needed to be maintained and preserved by the bank for at least 10 years. So generally what happens, uh, because the records indicate all of activities which have been carried out by the banking institution on a regular basis, that is the reason why they need to maintain it. Because at some point of time, there might be the requirement of these records. If any legal complications arise, the records will be taken into consideration. In case any customer grievances come out, then with the help of those records, the customer grievances can be settled. So that is the reason why we generally say, or there is a provision that whatever physical records in the form of books or in the form of ledgers or in the form of statement are being maintained by the bank, they are needed to be maintained and preserved at least for 10 years. Beyond that, it is not mandatory, but for 10 years, you need to keep that. So if you have opened a savings account today, but in the year 2022, but in year 2025, suppose you have closed that, but all the transaction details which have been recorded of yours will be there with the bank till 2030. Before that, the bank cannot do away with that record. So even though you have uh, uh, mm, stopped transacting in your account, or even though you have withdrawn your account from the bank, still then the bank will have the record of your transaction for 10 years from the date of opening of the account. So generally what we say, the bank should take appropriate steps to evolve a system for proper maintenance and preservation of account information in a manner that allows data to be retrieved easily and quickly whenever required or whenever requested by the competent authority. Here by competent authorities, we mean might be the RBI, might be the finance ministry, might be the government of the land, might be the court of the land, court of law, maybe the Supreme Court or the High Court, or any authority related to the government departments like income tax authority, like vigilance authority. Suppose they ask for the documents, you need to provide to them. So for that, you can retrieve the data from these records. That is the reason why you need to maintain it and preserve it properly. So further, bank should maintain for at least 10 years from the date of cessation of transaction between the bank and the client all necessary records of transactions, both domestic or international, which will permit reconstruction of individual transactions so as to provide, if necessary, evidence for prosecution of persons involved in criminal activity. So this is the reason why you need to, as a banking institution, you need to preserve the records. Because suppose you had a customer who in due course of time happened to be a criminal, so all the antecedents of that criminal will definitely be taken care of before judging him or before giving any sort of judgment against him. And in that perspective, if the person was found to be a customer of the bank earlier, then the banking transaction records can also be asked for from the banking institution. So in that case, if the bank have maintained the records, then the bank can easily provide that record to the competent authorities. And bank should ensure that records pertaining to the identification of the customer and his address obtained while opening the account and during the course of business relationship are properly preserved for at least 10 years after the business relationship is ended. So the date on which the relationship between the customer and the bank ends, from that date till 10 years, not from the date of opening of accounts, rather the date at which the relationship between the customer and the bank ends, from that date till 10 years, all the details, all the transaction details of that customer with the bank must have to be kept in the form of records and must have to be preserved for at least 10 years. So the identification records and the transaction data should be made available to the competent authorities upon request. Here, competent authorities, as I said to you, maybe in the form of court of law, maybe in the form of government of the country, maybe in the form of different departments of the government, like income tax department or the vigilance department or the enforcement directorate, like. So this is all about the maintenance and preservation of records. And these are the records which are actually to be maintained by the banking institution. Now come to the balance sheet of a bank. So this basically shows the balance sheet of a bank. And as you know, in the balance sheet, we have two different sides. And on the left side, we generally include the assets because assets goes on to generate revenue for the banking institution. So they indicate the income side of the bank. And liabilities are to be reflected on the right side of the balance sheet because liabilities generally refer to the expenses or likely expenses of the bank. So what items are being included under the assets? What items are being included under the liabilities category? If you look at the assets, you can find that under assets, the first and foremost thing required to be maintained is reserve with the central bank. We had already discussed it about while discussing the CRR. So what sort of reserves you are keeping with the central bank? that has to be that is basically in the form of assets. And as we have pointed out, minimum 3 to 6% of the total deposits mobilized by the banking institutions they need to keep in the form of CRR. So when they are keeping it with the RBI is providing some sort of interest. And at time of their requirement, they can ask for financial support from RBI if they are maintaining the CRR. So generally, the reserves with the central bank suppose is in the form of 6%, maximum 6%, and under it you can say that cash in value, banks deposit with central bank, settlement account, and statutory reserves. This all will be included under the reserves with the central bank. 6% comes there. Then comes the securities. It basically
Difficulty is very low. The
କୋଉଟା କହିଲେ?
slide ଟା ଦେଖାଯାଉ slide ର
ବଡ଼ ହଁ ଆଉ ଟିକେ ବଡ଼ କରିଦେବି ଏବେ ଦେଖାଗଲା ଆପଣଙ୍କୁ ଲେଫ୍ଟ ସାଇଡ ଟା ଦେଖନ୍ତୁ ଦେଖାଗଲା କି?
Yes, sir, visible.
ହଁ ସେ ଯୋଉ 6% ଲେଖା ହେଇଛି 6% ଟା ବେସିକାଲି ରିଲେଟେଡ ଟୁ ଦ ରିଜର୍ଭସ୍ ୱିଥ ଦ ସେଣ୍ଟ୍ରାଲ ବ୍ୟାଙ୍କ ତା ଅଣ୍ଡର ରେ ଆପଣଙ୍କର ଆସୁଛି କ୍ୟାଶ ଇନ ଭ୍ୟାଲ୍ୟୁ ବ୍ୟାଙ୍କ ଡିପୋଜିଟ ୱିଥ ସେଣ୍ଟ୍ରାଲ ବ୍ୟାଙ୍କ ଅଣ୍ଡର ୱିଥ ସେଟଲମେଣ୍ଟ ଆକାଉଣ୍ଟ and statutory reserve with the central bank 6% ଆସୁଛି ଆପଣଙ୍କର. Then securities basically indicate the investment being made by the banks. We have already discussed it while discussing the investment policy. As I said to you, in government securities, the banks need to invest to ensure the safety and liquidity. In government approved securities, the banks need to invest, and in corporate securities, also the banks invest. So securities generally relate to the investment, and 20% has been appropriated towards the investment. So 6% towards reserve with the central bank and 20% towards the securities, which basically reflects the investment being made by the bank. Then comes the loans, for which 70% is earmarked. So 70% of the total deposits have to be used by the banks in the form of loans and advances. And loans can be given to different entities. So individuals are there, business concerns are there, banking institutions are there. So under loans, we have interbank loans, we have loans to the enterprises, we have loans to government, we have loans to individuals. So all together, all the loans must have to constitute 70%. Then last one is other assets, which can generate some sort of income for the banks. And under other assets category, we have the real estate. If you have invested in real estate or foreign assets, then it should be up to maximum 4%. So the income side indicates the 100%, and 100% has been segregated like this. Then come to the right side, liability side, which basically shows the expenditure side of the banks. And as you know, whenever the bank is supposed to make any payment, it results in some sort of expenses by the bank. And here we have included the major form of payment by the bank is to the depositors. So they all accept money in the form of deposits, but at the same time, the banks have the responsibility to pay back that deposited amount to the customers or to the depositors as and when they require it. So deposits, in case of deposits, the bank is liable to make the payment to the depositors. So here the bank is not getting any revenue. Rather, the bank is spending money in the form of giving interest to the depositors. That is why deposits have to be recorded in the expenditure side of the balance sheet and has to be in the right side. So deposits basically in the form of transaction deposits, savings, and time deposits. So deposits constitute 70% in the expenses side, because the depositors' money have to be repaid in proper time, have to be repaid as and when it is requested to be paid by the depositors. Then comes the borrowings. Now, for any sorts of activities of the bank, suppose the bank has resorted to borrowings from either from other banks or from the central bank or from other financial institutions. So, in case of borrowings, the bank has to pay the interest on those borrowings along with the principal amount which it has borrowed. So, just like we individuals take loans from the banks, and accordingly we need to pay interest along with the principal amount that we have taken in the form of loan. In the similar fashion, the banks, if has borrowed some amount of money either from the central bank or from any other financial institution, they need to provide the interest on that. So that is being earmarked as 10%. Borrowing is covering 10% of the expenses. Deposit is covering 70% of the expenses. Then other liabilities like foreign liabilities, that constitutes 5%. And then the capital, which includes assets minus liabilities, that includes 15%. So in total, in the right side also we have 100%. And as you know, the name is balance sheet. We need to make a balance between the expenditure side and the income side. So whatever has been earned by the bank, all the money has to be spent by the bank. Then only the bank can maintain the balance. So might be many times I have seen that this type of question arises. You need to frame a balance sheet, a fictitious balance sheet of any bank. So if you know what items are there in the asset side and what items are there in the liability side, then easily you can frame the balance sheet of any bank. Any fictitious value you can also put, and ultimately you have to ensure that in the balance sheet you are showing that whatever has been the income or what is the total in the income side, exactly the same total is in the expenditure side. Is it clear? Is it clear?
Yes, sir.
Okay. So tomorrow we'll discuss about the other part, and at the same time we'll also discuss tomorrow, day after tomorrow I have the class, and we'll also discuss some questions. Thank you very much. Thank you for your patience here.